I think we've had a decent year in Bitcoin in a weird way because we've had lots of consolidation. Some of the OG sellers, sort of a circulation of that Bitcoin into institutional hands, I think is ultimately positive long term for Bitcoin. But I still maintain 150 to 200,000. I would have said to you 6 months ago we would have gotten there by the end of the year. But I would have also made the assumption that the Clarity and Market Structure Act would be passed. If we get those acts passed in the first half of next year, I do see that as a likelihood. I also think we're going to have a more friendly Federal Reserve next year as it relates to interest rates, will also help the price of Bitcoin. So I'm going to stick with my $150,000 to $200,000 prediction.
Anthony Scaramucci opens with a provocative prediction. Solana, not Ethereum, will eventually take the number 2 spot by market capitalization. He emphasizes this is not an anti-Ethereum claim. Both platforms can grow, both have strong developer ecosystems, and both will play critical roles in the future of tokenized finance. But in his view, Solana's trajectory is simply faster. Scaramucci's Solana outlook is bold. $300 to $400 by the end of next year, assuming regulatory clarity $1,000 within 5 years. But he stresses again that he is almost always early. The catalyst he is waiting for is regulatory clarity, specifically the Clarity Act, which would define digital assets in U.S. law and provide the green light for broad tokenization.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think it will flip Ethereum. That doesn't mean Ethereum's going down or anything like that. I think there's going to be market share for Ethereum. I think they could both grow. But I think from a market capitalization perspective, I think Solana will end up growing faster. Again, I'm a multi-chain sort of a person, so people get mad at me because I happen to like Avalanche. I do like Ethereum. And people say, well, I guess they want me to be chain monogamous, but I'm not chain monogamous. In fact, who is chain monogamous? And so, is it okay to be not chain monogamous?
I think so. I think polychainery.
Yeah,
I think that we're all a little bit.
It's not it's not an amorous thing. It just has to do with the realities of investing. It's like owning a lot of stocks in your portfolio. But to me, I just think that it is the fastest growing chain. That's the most activity of like the top 50 chains combined. It's got lots of use cases, lots of versatility. It's easy to develop on. And it's very low fees to transact on. And it's got great tokenomics if you want to stake your Solana like I do, or if you want to buy BSOL, which is a staking ETF. So there's so many different things that make me believe that it will flip Ethereum. Having said all of that, that's not me saying anything negative about Ethereum. It's really talking about the promise of Solana. You know, I've been right about Bitcoin, but I've been wrong about timing. I said Bitcoin would get to 100,000, but if you'd asked me that, I thought it was going to happen at the end of 2022, but of course I got the regulation wrong. That's because I was actually reading the administrative law. If you pass the Bitcoin futures ETF, it would be logical and consistent that you'd have the cash or spot ETF a few months after it. But we had, probably the worst SEC chairman in the SEC's history, Gary Gensler, just for no reason, arbitrary and capricious reasons, as what the judge said about him, blocking it. So that delayed the Bitcoin price going to 100,000. Solana is a little bit different of a case. I think Solana, until you get the Clarity Act passed in the United States, you're probably going to not get the full utilization of tokenization. So Solana should have a good year next year if we can get that done. And so could it be $300-$400 by the end of next year? Sure. Is Solana go to $1,000 over the next 5 years? I really do believe that. And obviously, I put my money where my mouth is. I've been always wrong about timing, and so I'm going to wear egg on my face. Bitcoin did get to 100,000, but of course, we had to wait till after the ETF and after a clear sign from the government. I think we've had a decent year in Bitcoin in a weird way because we've had lots of consolidation. Some of the OG sellers, sort of a circulation of that Bitcoin into institutional hands, I think is ultimately positive long term for Bitcoin. But I still maintain 150 to 200,000. I would have said to you 6 months ago we would have gotten there by the end of the year. But I would have also made the assumption that the Clarity and Market Structure Act would be passed. If we get those acts passed in the first half of next year, I do see that as a likelihood. I also think we're going to have a more friendly Federal Reserve next year as it relates to interest rates, will also help the price of Bitcoin. So I'm going to stick with my $150,000 to $200,000 prediction. I just got it wrong in terms of timing.
Do you think Clarity passes next year? We heard this morning that it's getting a little bit messy with the latest Democrat draft, looking like we're not going to see a markup next week. It's almost the end of the year. We're heading into midterms.
Yeah.
Does Clarity get pushed to the back burner?
David Sachs says no. I think he's a very effective guy. I think he's very capable. I think younger Democrats would be making a huge mistake if they go in that direction. I think the crypto lobby proved itself in 2024. They knocked out some big incumbents that were anti-crypto, sent a message to people. I don't know a lot of anti-crypto voters. I understand the Democrats' position because it's opposed to the president. And I think the president did hurt the industry by having a meme coin launch several hours prior to his inauguration, 2 meme coins. I don't necessarily think that helped him with his political adversaries. And so, by and large, the president, again, I want to be very fair to him and his administration. They have been better for crypto, certainly better than a Harris or a Biden administration. But I think that sort of stuff slowed us down. If I was at this desk with you at Breakpoint in Singapore last year, I would have said we would have gotten both of those pieces of legislation passed. But I do think that meme coin introduction slowed down the Democrats. And you saw that petition that was signed recently where there's a lot of different groups that are against it and trying to block it. And they're doing that for political reasons more than that they're doing it for utility reasons. So the industry's still fragile. We got to get the regulation to be post-partisan or even non-partisan, if you will, sort of transformational. And we don't have it there yet. But we have to continue to work on that. But if you ask me, is it going to get passed or not, yes or no, I think it will, despite the current opposition. I think lots of Democrats don't want to go into the midterms with the crypto PACs gunning for them.
Scaramucci highlights, through Wood's analysis, how food inflation remains deeply above trend. CPI food component is 16% above long-term trend. SNAP usage reflects stress among lower-income households. High food prices reduce discretionary spending, which slows risk asset flows. But with tax relief rising and gasoline prices trending downward year over year, the squeeze may begin to ease. The administration will ultimately be judged on affordability, food, housing, and energy. Scaramucci expects a friendlier Federal Reserve next year. His forecast, Kevin Hassett is the most probable next Fed chair. If not Hassett, Governor Waller is the second most likely. Both believe lower interest rates support productivity and growth without reigniting inflation.
And so here's fiscal policy. The budget deficit is beginning to shrink. It doesn't look like much progress, but it is shrinking. I think roughly $350 billion, and about 2/3 of that, maybe a little more, is due to the tariffs. Now, I know in the past, few in the knows, I've been focused on the effective corporate tax rate, which has dropped to 10% in the US. It's really the lowest in the developed world. And I think one of the reasons capital spending is starting to take off is because that effective corporate tax rate is attracting investment into this country, perhaps to the detriment of other countries, but I think it is also expanding the pie in this country. I'm going to talk this time about individual tax rates now that we're facing tax season, and feature a new chart. Again, this is from Piper Sandler. Nancy Lazar and her team do a great job on fiscal policy and delineating the changes. Here you can see what individual tax relief looks like for the next 4 quarters. Now, in the One Big Beautiful Bill, OB3, there were tax cuts, a number of different kinds of tax cuts, along with child tax credits. So we said we know no tax on tips, That'll be important for those working in hospitality this holiday season. No tax on overtime. That's an incentive for people to work overtime. Now, we're not seeing overtime hours proliferate yet, but if we're right about next year, those working overtime will get a nice big break. Another one is lower taxes on Social Security. I think no tax up to a certain level, and that is also a welcome break, especially for baby boomers who are retiring. I think the number is a little over 1 million per year, so good tax break there. The SALT deduction was doubled from 10,000 to 20,000. So those in high tax states get a little bit more of a break than they have recently. And I did mention the increase child tax credit. So you can see the impact on income levels here. So DPI is disposable personal income. Quarter to quarter at an annualized rate. So without tax relief, Nancy and her team's estimate was that in the first quarter, nominal disposable personal income, so that includes inflation, was going to annualize in terms of growth at a 4% rate. With tax relief, that will be a 10% annualized rate. And dropping down to the bottom line there, real disposable personal income. So that takes away inflation. What's the real gain in income? It looks like that's going to be, with tax relief, roughly 8% at an annual rate. That's a very large break. That's a very large increase in income. And so we think entering the year, the consumer will have more spending power. Now, one of the reasons the consumer needs more spending power is food prices. And last in the know, when I raised how high the SNAP program, how high the spending was, versus the poverty level, it was way out of kilter. But those who wrote in, yes, you're absolutely right. Do we see sticker shock at the grocery store? Absolutely. And so want to show you how much above trend food prices are. So you can see in the purple line is the SNAP participation rate, used to be known as food stamps. And you can see the dashed line is the trend of the CPI. And you can see the arrow pointing to the green CPI level, which is still 16% above trend. So definitely food prices have hit the affordability of everything. If you have to buy necessities, you have less for discretionary spending. So I'm sorry if there was misinterpretation. We were just talking about the kinds of spending cutbacks that were taking place in the context last month of the poverty level. But those writing in talking about food prices, have I been to the grocery store lately? Absolutely. And totally agree with all of you on that. And I think the Trump administration is, as I mentioned before, going to be judged on affordability, both food and housing. Gasoline, we are getting a break, and that is freeing up some spending power. I think oil on a year-over-year basis is down 20%. So moving forward, it is possible that gasoline prices will drop year-over-year 20%. Right now, it's just down a little bit year-over-year, but 20% would be a very nice break. On to monetary policy. Well, there's been a lot of drama there. It does look like Kevin Hassett is the top probability for becoming the next Fed chairman. Now, he is still he now is chairman of the National Economic Council and has been an important deputy to the president, I think, accompanying him everywhere. There is some talk that he will have both positions for a while if he is nominated and approved as a Fed chairman. If he is not, or for some reason the president decides he needs him too much by his side, then we think the second likely candidate would be Waller, and both of them have been quite public about the need for lower interest rates, and also public in their belief that lower interest rates will not cause inflation or stoke inflation, but will stoke real growth and productivity gains that will hold inflation down. So philosophically, they are aligned. Here you can see money growth. Now, money growth is on a year-over-year basis in the purple there, is stalling in the 4.5 to 4.6% range. And you can see if you look across this chart at the purple line, it is in the lower end, not as low as we reached as the Fed was really jacking rates up and trying to squash inflation. But it is on the lower end of this chart. The other thing, and I have mentioned this in Other in the Nose, is that the velocity of money is also flattening out. And if both of these decline, that will mean serious pressure on nominal GDP.
Anthony Scaramucci's full thesis is an integrated macro to micro argument. Solana's outperformance lies in its structural advantages, not in Ethereum's weakness. Bitcoin remains on a long-term trajectory to 150,000 to 200,000, but the timing hinges on regulatory clarity and monetary policy. The political winds are shifting. The crypto lobby has demonstrated its power, and the Clarity Act represents the key unlocking mechanism for tokenization and institutional adoption. At the macro level, expanding disposable incomes, targeted tax relief, and a potentially more accommodative Federal Reserve create a constructive environment for risk assets heading into 2025 and 2026. The combination of supply rotation in Bitcoin, accelerating ecosystem activity in Solana, and growing legislative momentum forms what Scaramucci believes is one of the most promising setups of the decade.